So, as I said in my introduction in Norwegian, we have invited two investors to just talk about their approach to investing in digital infrastructure and what's their perspectives, what are their markets, what kind of capital do they provide, is it debt, is it equity, are you opportunistic, do you have the infrastructure perspective, and so forth, and so forth. And to try to make us understand this a little bit better, I've invited two brilliant investors, both from different perspectives. I'll start introducing you. Sunniva Bjørnstad.
Yeah.
You're heading the, you are, as far as I understand your title, you are the investment team lead in HitecVision. Could you just explain us a little bit about your position, your background, and your take on the investment that you're working on now, if you can, whatever you can share about that.
Yes, of course. The title is not very correct, but it doesn't matter. I'm a senior partner in HitecVision, and I'm heading the investment team. That's for us, all of the investment professionals below the partner level. So it's a dual position. But in this context, I'll come from the partner perspective, talking about our investments. And we invest in energy. We are an energy specialized investor. We've been around for about 30 years investing into oil and gas. Now the last 5 years only in the energy transition space. And through that angle, we've come now into the data center industry from an energy angle, really. So we are co-owning Skygard, which was on the list of the new members in our organization, together with Telenor and Hafslund. So it's a bit of a new angle into the data center industry.
And to second Sunniva, we have invited Bernt Berg-Nilsen, not risking to announce your wrong title. I will ask you to who you are and why.
Thanks. So you're giving the microphone to someone from Bergen. That's not really a good idea. I'm from Stolt Kapitalforvaltning. So we're running a public equity fund. So a colleague and myself, we're looking at global equities, and we have a rather broad mandate. So kind of the approach we're taking is a holistic one, and we're exposed to different part of the value chain. Probably not the right audience to say this to, but we do not own any data centers as such, but we do own a lot of what goes into the data centers and other parts of the value chain, and hope we can expand on that.
Yeah, because it is very, as we did during the presentation, so here, I think it's very interesting to just to hear that you have two quite different perspectives, but it's everything. It's in the same domain. It's the digital infrastructure domain, but you are more on the hardware and the software that runs in the data center. So just want to give you just one cue here. It's NVIDIA.
Right. Yeah. And you're looking at me.
I think you as a Berg-Nilsen.
We have invested. We've been in NVIDIA for a couple of years, and the funny joke is that NVIDIA makes 101% of the profits in the AI industry. I mean, OpenAI is losing $5 billion this year. So obviously, I'm exaggerating when I'm saying that NVIDIA makes 101% of the profits, but that is a company that's earning 75% gross margin, 55% net margins. So it's almost a monopoly position, running 90% of the advanced chips, and the trajectory of growth is coming down, but you come down from an extremely high level. So we've been looking at triple digits top line growth, and that's what has attracted us, that part of the value chain.
So later on, we are going to have a discussion on Norway taking a position as a dominant player in the AI market. How do you see that?
Don't do this at home, I guess. Is the, I mean, this is extremely advanced. I mean, keep in mind, NVIDIA has been, it sounds like an overnight success, but it's been around for 30 years. this is the third time they've been lucky, right? First with the gaming industry, then in crypto side, and now on the AI side. So there's something about NVIDIA that makes it a kind of a special case. And the extremely, of course, special thing is the amount. I mean, this year they're probably going to do a top line of $120 billion, and over 50% is going to hit the EPS line, the net earnings to us as shareholders.
I think we'll circle back to the energy question in a bit. So I think that discussing NVIDIA in that perspective is also interesting.
Yep.
But Sunniva, please tell us, as far as I understand, HitecVision does not have any substantial experience from investing in digital infrastructure. As you said, you were basically in the energy sector. So what made you turn your eyes to this industry and invest in this asset, this type of asset?
Yeah, I can elaborate a bit on that. So in 2019, we decided to go out of oil and gas. It will take some time, but we're selling out basically all of our assets and investments within oil and gas. And then we have since then raised a couple of funds to invest into the energy transition space. We like to stay at the producing link, so going to the supply side and all of the technology that feeds into the various industries, but stay at the operational level, basically. We have 3 categories that we invest into. It's renewable power, making the power basically from hydro, wind, solar, etc. And the second aspect that we have is sustainable fuels. And then the third one is energy efficient systems. And that third category is a bit of a broad one. It goes on society, how can we optimize the energy use in the society. And through that category, we invested into Celsio a couple of years ago, together with Hafslund. And really through that investment, we came into the data center industry to see district heating being used as a heat offtake for data centers being extremely interesting. We think the more regulation we can get on sustainability requirements for data center industry, the better for our investment. So that was our way in. So it was really the link that we needed to make this work in our mandate as well, to be a full circular system where we have the intel and the know-how on the producing of power, and then we work with our partners to make sure that we understand how to construct and create and operate the data center. And then we have, together with Hafslund especially, the link to the district heating reuse of heat.
Thank you for that. Just a reminder that tomorrow, as I mentioned in the introduction, we are having a supplier meeting discussing the sustainability and the heat reuse. I would say challenge, because yes, district heating, you can do that when you have it in arm's length in urban areas like Oslo. But on the countryside, it requires new solutions and new minds. Are you doing any have you any thoughts of that?
Yeah, so Skygard, when we set this up again with our partners, we wanted our data centers to be in cities for this matter. If we deviate from that going forward, we may, but we need to have a sustainability angle to it. So in Oslo, where we're now building at Økern, we have the district heating discussions ongoing with Celsio to make sure that we're able to capture that heat. If we are to go into more rural areas, we need some sort of solution to that. It can be fish farming, it can be tomato farming, whatever the industry can come up with.
Okay, Bernt, let's switch again to the energy, because I think that access to energy, that's a limiting factor for further growth in the industry. How do you see that we are close to the ceiling in Norway now, from your understanding of the industry, and what's going to happen? Because we're not alone. We are not alone here. The Norwegian energy consumption is still more fossil than renewable.
Yeah, well, let's zoom out and try to frame that from. I mean, we're looking at our mandate is a global one, so we have full flexibility of where to invest. And actually, it's like a fun fact, the best performing sector in the United States this year is utilities. Something as boring as utilities is up more than technology in the United States this year. It's up 25%. Why? Well, you're going from a kind of a secular low growth to a, at least we look throughout this decade, a high growth, to answer your question on the energy side. So in the United States, we've picked NextEra, which is the biggest solar and wind company. They have also nuclear and other things. So it makes up a small part, but the growth the next 5 to 10 years of electricity consumption is going to come from the data center part. If you're looking back 5 years, electricity consumption, United States, Europe, is basically flat because you have that efficiency gains, which is counteracting the general growth. So our angle is on the energy side, and then on the other side, with things going into the data centers, we're trying to identify companies with a sustainable competitive advantage. So we do have ASML, which do just in Japan from the Netherlands, and China Semiconductors as well, which has kind of this unique position making money today. But turning to your question, I mean, it's interesting. I mean, it was yesterday we saw Microsoft doing a deal with Constellation Energy in the United States, opening or reopening a 3 Mile Island nuclear plant. They're signing a 20-year agreement, 2028 to 2048, to fire up power to get to the green goals of Microsoft. So I guess it's a longer discussion if nuclear, whatever nuclear is, but we're seeing kind of a secular growth on the energy demand side, which probably looking at something in the vicinity of 15% this, I mean, at least the 5 years throughout this decade, which you probably end up like 1,000 terawatts, you know, in 2030. These huge numbers, but the key point being you're going from low growth to kind of a utilities being a high growth area, and that's where we found a couple of interesting cases. NextEra in the United States, and Iberdrola in Spain is also interesting as well, because you have kind of the same dynamics in Norway. You have contained energy area. And to getting back to your question, why do people invest in data centers in the southern part of Norway and Sweden? It's because we're very nice people, of course, all of us, but it could be because we have this access to this unique green power. I think this is this discussion to be had, are we pricing that correctly?
You know that
throwing it out there.
No. This is perfect. This is perfect. I didn't expect less from a Berg-Nilsen. So, if you look at the energy, the access to energy, and the quality of the energy that we are actually offering in Norway, it's green, it's renewable, it's abundant. Are we selling it too cheap? I'm asking.
Are you asking?
That's an open question.
Yeah.
Are we giving it away too cheap? And is it that is that the reason that we are so attractive?
Probably yes, I would say. I think we need to work on that. But again, it comes to, you know, the customer chooses, you know, the cheapest place to be based on the rules and regulation that it needs to adhere to. So a lot of the you know, capital goes into Norway because we can store things here with a good sustainable angle, even though the heat reuse is not that high on the agenda, for me a bit surprisingly yet. But the energy that comes in is something that everyone, you know, talks about. So Norway having green energy is of course very attractive for the foreign players. And then I'm not sure if us as an industry really put any price on it. It's just, we just pay we charge what we pay for it. So it's not really used as a competitive advantage yet. No,
and I think there are several occasions that maybe even now that the prices in the NO1 and NO2 areas are among the highest in Europe. But we're still competitive. But I want yet another, go back again, and I think, Bernt, you could probably explain this, this seemingly endless growth. Is that an arms race, or is it a fear of missing out, or is it a sustainable business model behind it? Because somebody has to pick up, somebody has to reflect on the ROI on these investments.
No, it's a good question, and it comes down to where are we in the cycle. I mean, if you want to do the Gartner hype cycle, and if you do 1, 2, 3, you kind of invest, and then you try to monetize it, you know, and probably we're somewhere in between that. The public market, at least for now, allows for a lot of investments. I mean, this year the 4 big US tech companies aggregated are probably going to spend $200 billion US dollars on capex, and the majority of that is data centers, and the majority of that again is Nvidia and so on. But the profitability in those companies is extreme, right? I mean, I'm talking about the Microsoft and Googles and the Amazon of the world. As long as that profitability is that, I think this arms race is going to continue, because if you're in that position, and I think the race is one of those 4, there's no one else that's going to come up due to the size of the capital commitment that is needed. But as opposed to the dot-com area, which was really TMT bubble, this time both these companies are cash rich and they're cash generative. So as long as kind of the economic backdrop is as good as it is, I think this will continue, because you can't afford not to. I mean, it's like if you stop now, it's a bit like being a high school student versus a PhD student, right? If one of these prove out to be a really valuable use case. But I think this is a discussion to be had, and because we're scratching our head a bit about this, what is the use case? Because if you look at it aggregated, about $1 trillion is going to go into this. I mean, last year, this year, next year. What $1 trillion problem is this solving? Right? What $1 trillion problem are we solving? So it's, I mean, it's one of, going back to kind of base principles. I mean, either productivity needs to come up or costs needs to come down. And we're not there yet. I mean, if it's like chatbot and customer service, that's not going to pay $1 trillion, right? So at a point, we're not there yet. But my prediction is return on capital. It's going to be like a Jerry Maguire moment, show me the money. And show me the money is probably going to be sometime next year.
Okay.
Yeah, can I also comment on that? Yeah. So when we took this to our investment committee in HITEC, it's of course a lot of debate around the market, and then this growth, will it really come? Since we decided to invest into this, the AI movement has gone crazy since the last 2 years. So we think really the market will grow. And for us as investors, we can invest in different types of markets. Sometimes it's pure growth markets like this one. Other times we can invest in markets that are actually almost declining, because it creates a lot of movement, consolidation opportunities. This data center industry for me is not really a consolidation play. It's just growth, and it should be enough for everyone, we hope. But there is also a risk element that we can kind of cannibalize each other out a bit, because you take a lot of the investments up front, and then you get some customers to serve that capex, and then you're kind of home free, and everything is on top of that is super profits. And if you have too much space vacant in the industry and the customers kind of catch up on that, then they can really use their pricing power against us as owners of this infrastructure. And that's where I see this industry potentially being challenged in a few years' time, when there's too much vacancy, too much built out, and the customers can really, screw us a bit on the pricing.
I think then that you have a very good point there, and I think also that we are at the junction in time that really, I think that all the guys who is going to attend in the next panel is scratching their heads. How do we design our data centers for now? Because the data centers, from like, even they are considered modern today, like 2 or 3 or 4 years old. They're based on an energy density that's basically built for cloud services and not really high energy density. But suddenly now you're talking about NVIDIA talking about 70, 100. I even heard some ridiculous numbers like 1 megawatt per rack. It's okay. That would really set a completely new requirement to the data center design. And I think also the risk of having, you're sitting in the end with stranded assets. That's probably it. But I'm going to challenge the 4 guys and later with the same question. Feel free to come.
So just to repeat Jensen Hung as an NVIDIA shareholder, the more you buy, the more you save. So keep on buying. But joking aside, I mean, looking at from the big four clients, right, the end clients here, they're cash generative as is, so I'm not worried about this year or next year, because if you look at CapEx as a percentage of sales, and I'm talking about Microsoft, Google, those guys, the hyperscalers, it still is in the 70% area. It's lower to the operating cash flows. When we look at CapEx versus that, it's lower than the dot-com areas. I'm not concerned as of now. But just keep in mind what went wrong. It was really like the TMT bubble, right? That back then, and you're touching in on an important point, thing like build it and they will come kind of thinking, which went into overdrive in 98 and 2000. And I was just looking at the fiber optic cables. It went 10 times from 1996 to 2000, and which combined with the economic downturn led to an overcapacity, and then you ended up in this pricing issue. I think as late as 2004, 80% of the fiber optic cables in the US was not used. Imagine that. And then, of course, smartphone, all these apps came. But I think, going back to the point, I think for the getting the line of sight even further in terms of growth, what I'd like to see is develop use cases, end user cases, factory productivity up and cost down. And we're not there yet, but hopefully, during next year, we're probably going to see some of those killer applications develop.
Yeah, because every time I talk to an investor or any client, the key question is, when should we start building the liquid cooling in our data centers? Which is basically that. So, back to you, Sunniva. Can I ask you, I'm not asking you to disclose anything, but I think people here are curious to see what kind of market are you addressing in Norway? Can you talk us through that a little bit?
Yeah, sure. And just on the liquid cooling, we have started doing that. So we're working on that. So Skyggard was set up to be positioned towards the most demanding and challenging customer segment, the ones that require high security, but I think that goes for almost all, high efficiency, high sustainability, and also for those requiring Norwegian owners in a changing geopolitical landscape, and the sovereign aspect becomes of urgency in a different way than it was a couple of years ago. So that was part of the design of the company. We want to have customers that safeguard the digital backbone of the society, the critical infrastructure. It can be banks, health systems, government agencies, companies like that. We also see that this market is not huge. It's typically companies that have data centers in their cellars today that should be moved simply for efficiency purposes. And that will happen either right now, but at least within 5-6 years, we think that all of that will migrate. But then the size of this market going forward is not enormous. But we believe that to create an offering that fits this niche type of clientele makes us eligible also for all other customers. But that was the customer niche that we have been set up and designed to service in our data center facility 1, which is the only one in Skyggard so far, being built at Økern. But then we hope that type of specification of the building will also be attractive for other types of customers.
But as far as I recall, you are planning more data centers within the Oslo area. Is that on the longer perspective?
Yes. So the ambition that we have agreed on is to build out 40 megawatts. So this is not huge in the context of what we see in Norway in general. The first data center will service 20 megawatts. So we're looking for the additional growth in the Oslo region, but we're also exploring other areas in Norway, and just trying to be, I guess I can use the word opportunistic, since you said it before. We are also opportunistic every now and then, so we're looking into the opportunity space.
That's very good. You're in a good company here. So, Bernt, I would again back to NVIDIA, because it really puzzles me. How do you maintain a 15-20 years de facto monopoly in that space, and even more? It's like we hear speaks about the big tech companies developing their own chipsets, but I guess it's not only the chips that's that matters here.
No, it's to be touched in on the history of NVIDIA, which is unique, right? It's an overnight success, 30 years in the making, and the founder was Jensen Hung, is still there, been there for 30 years. So there's something about the culture, because culture it sounds a bit like it's not substantive. What does that really mean? I think it's this constant urge of keeping a innovation culture inside. I think the internal motto of NVIDIA is we're always 30 days away from going bankrupt. So there's this urgency, which made them 3 times lucky, right? With these graphic cards, which turned out to be very good in terms of the mathematics, in terms of going into AI. But I think what's kind of misunderstood a bit, or not appreciated really with NVIDIA, 2 other things. It's the fact that they have this CUDA language, which is really hard to disrupt for anyone trying to penetrate it. So you have kind of 2 risks. You have competitors like AMD and Intel. Intel doesn't seem to be in a great position, to put it mildly, to disrupt NVIDIA, and AMD is trying, but it is so much smaller. And again, you're coming back to this software, which kind of creates a moat for NVIDIA. Companies themselves, some are trying, yes, to develop their own chips, but I think it's a little bit too small, too late kind of situation. And I think what really distinguishes NVIDIA is this acquisition they did a couple of years ago, Mellanox, the Israeli company, which in hindsight turned out to be a gold mine, right? Because it doesn't help you having 1 chip or 2 chips. I mean, you need to put 6 of them together, and GPUs and then a CPU, tying it all together, which you get this box. And Mellanox is turned out to be a really key acquisition they did 3 years ago. So it's a combination of those 3 things which make them take out 75% gross margin and 55% net margin, which is unheard of, in that scale at least, unheard of. Is it going to last forever? Probably not, but I don't think it's not neither the competitors nor the customers. I think it's the fact that in an economic downturn, it's like the metaverse or virtual reality or blockchain. I mean, if fingers crossed in the next year or 2 we're going to hit an economic bump or something happens, the first kind of projects that are going to be put on the back burner are expensive projects not creating cash today, and that is the risk, the main risk for this. So I encourage build the data centers, go ahead and buy all the equipment you need, but I think that's my keyword to have in mind, I think.
Yeah, I take an oath and buy more, say more.
Buy more things.
And also, and you mentioned also that you are investing in TSMC and ASML.
Yes.
Those are basically doing a duopoly or a monopoly in terms of manufacturing, so chip manufacturing of that quality or grade.
So we're kind of looking for companies with a unique position that are able to take it either high margin or have a long runway in front of them. And the Dutch company ASML has ended up with a unique position in the EUV machine that if you go I can never say that word, which makes the chips, right? And there's only one company, one piece machines cost several hundred million euros, and the same with TSMC. So again, looking at this industry from a holistic point of view, and you're asking about NVIDIA, the real question to answer, or kind of to ask, is what is the bottleneck constraint? I think the discussion to be had is if costs are going to come down, back to productivity, or costs are going to come down, the earlier innovations which we have seen, being the internet, then you were solving an expensive problem, right? With the cheaper devices from Amazon than to buy in a bricks and mortar store. It always kind of makes sense. So again, turning back to what's the $1 trillion problem we're solving here, I think as we're all kind of scratching our heads to do chatbots and customers said, it's not to be $1 trillion worth, right? So use cases need to be developed. We're cheering for that and hoping for that. So that's the key concern.
Yeah, and I think that there are more concerns on if the Norwegian government is really where they should be in terms of chasing this opportunity, or actually be a part of the race. So we have this AI billion that was basically spread thin over the academic institutions, not into industry. I don't know if that's what's your perspective on that.
Yeah, I read about this AI billion, but we just, went on with our day. Didn't think too much more about it. So, if the academics want it, I think they can have it. the results will work on our business cases without that type of support. And to get support from the government has actually not been needed for the data center industry so far, which is quite a privileged situation, which is a bit strange, I think, in the public sphere, because a lot of other industries that I work on a lot, that is very subsidy heavy, are much more popular in the public eye than data centers that can manage on its own perfectly fine. So it's a bit of public opinion. I think it's interesting in this industry.
I think everybody here is what you're saying. I think so. We come in, we are fully quite cold. You want to say something, Jon?
Is it allowed to ask questions?
Yeah, absolutely. So I think that we basically are on the end of our panelist discussion that's right to end. So Jon, it's you want the mic?
No, okay.
Raise up.
Right.
State your name and number.
210 Gravrock, Gravrock, CEO Bulk Infrastructure. This question is, I think, in particular to Bernt, or backstory, because I think I know the answer from Sunniva, but I wanted to ask a bit about the ownership, especially of operators in this space, because it's a debate in Norway for the time being, and I think in many markets that sovereignty issues and so forth around the data themselves and technology for that matter is high up on the agenda. And I'm personally a bit concerned that we are taking sort of a new technology platform opportunity, especially for Norway, and turn it too much into a local phenomenon, making us never really scale to the potential we could have. So just wanted to just get your perspective a bit on that debate, perhaps.
Yeah, doesn't listed data center owners, right? There's a tremendous success just looking at the US, Equinix, and PwC, which is the share price performance, and the actual fundamental performance been fantastic. In terms of answering personally, I chair for the Norwegian data center industry, but I think what has to be kind of cautious or is aware of this kind of license to operate. Because we have seen other countries where it goes too much too fast. I guess Ireland's moratorium as we speak on the data centers. If you look at the in Virginia, in the United States, Northern Virginia, Logan Country, Bloomberg was running this article. Too much data centers too fast, right? Because it's like getting 10 IKEA boxes popping out outside your door. It doesn't tend to be popular. So I'm really encouraged in the Norwegian data center industry. But I think in terms of we've touched the power consumption use with and that kind of public license to operate, I think that kind of will be key. And for us, we looked at the US data center owners, attractive economics, but a bit too expensive for the price. Looking at multiple connections and iron mounted digital equity trust. A bit too much growth kind of priced in. That's why we haven't bought into those folks. Yeah.
Okay, I think we have time to one more question before we take a break. Any volunteers? If not, give the fantastic panel a good hand. Thank you so much.